And you're welcome to 25 minutes of the only weekend business program, Capital Market, right here on Channels Television. And it's the final one for the month, for the second quarter, and for the half year. I'm Ladi Williams. Good to have you join us. As usual, let's begin the show with some of the major markets we track globally. We see it was mixed sentiment right then in the global markets that we track. Overnight in the United States, we see stocks on Wall Street. We see the close of the day mostly lower as traders digested fresh economic data out in the U.S. that indicated slowing inflation as well as better than expected consumer sentiment figures. At the same time, traders also wrapped up the first half of 2024. We see the Dow Jones there, that was down by 0.12%. At the same time, the Nasdaq Composite fell by 0.17%, while the S&P 500 closed the day by 0.41%. In Europe, stocks also ended mostly lower as investors reacted to the U.S. Eurozone inflation data. The indexes closed all in red, with the UK's FTSE 100 index that was down by 0.19%. The German DAX was up 0.14%, while the CAC 40 in France declined 0.68%. And in Asia Pacific now, see was a positive close for the markets as they reacted to the upbeat economic data from Japan, while investors were also awaiting the U.S. inflation report. Japan's Nikkei 225 climbed by 0.61%, while in Shanghai we see 2,967 points for the index, up 0.73%. Big jump there. Hang Seng Index 17,718 points, marginal gain of 0.01%. And back home in Nigeria, the NASD OTC securities markets performance ended the second trading week of June negative as the index dropped by 0.03%. That was the last trading week of June. While the market cap closed flat at 2.2 trillion naira. Same time, the volume of securities traded this week surged by over 1,000% to 2.5 million units, while the total value of transactions for the week also soared by more than 425% to close at 278 billion naira, while the number of deals carried out was higher by 99.11% week on week. Top two advances for the week are Afriland Properties and Friesland Campina, while Arido Holdings, which was the top decliner and the most traded security for the week. To the domestic stock market now, close the final trading week of June on a positive note, up by 0.32% after a mixture of bargain hunting and profit-taking within 5 sessions, particularly renewed interest in Saplet and Transco Hotel that drove a weekly gain on the NGX as the all-share index also recorded a 0.3% month-to-date gain, while the year-to-date return, that stands at 33.8%. We call that the first half returns there. However, the sectoral performance was largely mixed due to bargain hunting and profit-taking activities by investors for shares across the 5 key counters of the market. Computer Warehouse Group tops a list of 48 gainers with more than 44% increase on its share price, while Jais Bank led the 34 other losers with over 11% decline on its share price. The trio of FBN Holdings, Access Holdings Company, and Transcorp were the top 3 contributors to a total volume of 49.97 billion naira that was traded for the week. All right, now let's discuss the matters right there in the market in the trading week, and definitely looking at Nigeria's debt stock in the first half of 2024, which is the first quarter. We have data for the first quarter. Joining us now is Mr. Mukhtar Mohammed, CEO of Finance with Mukhtar, joining me right here in the studio. Great to have you.
Always a pleasure.
Thank you for sacrificing your weekend for me, as usual. Thank you so much. So let's look at Nigeria's Treasury Bills. Their debt's about 10.4 trillion, 60% rise in just 3 months. So it looks like we're stacking up the debt.
Yeah, the government
at this point. The government needs money.
The government needs money, and that's an easy, the rate is not as high, and then the time frame of payment is
so it's a good thing is domestic borrowing.
Domestic borrowing. But I don't have a problem with domestic borrowing. It's even advantageous when you do domestic borrowing, especially if you have done foreign borrowing. You borrowed at 1,000, maybe at 800. Today is 1,500.
Right.
So if you borrow at 1,500, you don't know what it will be tomorrow. So I think foreign borrowing, domestic borrowing is good. It sometimes helps to galvanize the economic activities, especially in some of those, what you are borrowing for, especially they are borrowing for mostly infrastructure or trying to cover up some of the budget deficits towards capital project, not recurrent expenditure like salary or allowances. So fantastic. I'm not against borrowing, but again, you always have a challenge when you look at your borrowing, then by your revenue. So that's why the capital market is good, because you now look at a long-term plan. You know that your revenue will improve with time and you'll be able to pay off. But if you are already in there, like foreign debt servicing and all that, it's actually affecting the government project. So that's why they are trying to borrow through the domestic market, which I think is fine.
Right, but looking at the total debt stock in the first quarter, over 120 trillion now. That's for Nigeria's total debt stock, at this time. Someone I spoke to earlier did say, even if we liquidate our foreign reserves, it cannot cover. We'll still owe, at this point. So definitely, we want to see development with huge debts, because debt is not bad, but it's what you're spending that debt.
Exactly.
That's a problem.
That's a problem. I think that's what government need to come clear on. We need to know what you're spending most of this debt on. Is it capital project that in turn will generate jobs and also be able to generate revenue to pay off those debts? Or is it we're taking debts to buy presidential fleet or whatever? We need to know. We can't be taking debt and using it on our luxury and we think that we are going to be fine. So for me, I think government should come up clear and tell us what they are borrowing for. If you look at capital projects, they are borrowing for the second Niger bridge, if they are borrowing for maybe construction or power. Even in the area of power, I think government should begin to think to take their hands off there, because privatize and let's know that you are there to regulate. Don't spend any money that you don't have on the sector that you can even earn revenue for other social investment like in healthcare and education. So government should really look at what they are really borrowing for. For me now, I think it's becoming alarming. But when this government came to power, the minister said, we're not going to borrow any longer. But again, it is what it is now. They are borrowing again. And the only difference between their own borrowing and the previous borrowing is that their own borrowing now is saying about 34% of the budget, and then the remaining 35% of the budget, the remaining 65% also is not even enough. If salaries take over salaries and allowance, take over the remaining 65%. So they have to borrow if they have to do any capital project. So that's the dilemma they have, and they are looking at it. Where can we borrow from? The domestic capital market is cheaper for them. So they are going, instead of going through the normal conventional bank, or they are planning a Eurobond, but again, the reason why they are planning the Eurobond is to stabilize the exchange rate. It's not because they really need it. And that is another thing that could fuel the economy. Just this week, the president said he's coming up with about $1 billion package to galvanize the economy, especially in the area of food security.
Right, food security is a big issue right now with food inflation over 40%. But
remember that the CBN government has said that some of the inflationary pressure that we have was because of government intervention.
Right.
So
they're intervening again.
They are intervening again. So what does that tell you? That the next time the MPC meet, they may be hiking rate. And you know what hiking of rate does for small businesses? They're already suffering because they have a genuine reason to agree. There's so much liquidity in the system. Remember the president have said the governors should go back and even come and meet him with a plan within the next 7 days. So I don't envy the CBN this time. They are between the devil and the blue sea, and they will definitely...
Because it seems that at this point, we see the CBN trying to mop up at this time, but we're seeing another segment of the government pouring water into that mop up.
Laddie, it was the essence of having big capital projects and your people are hungry. And then they will in turn be damaging those projects, destroying those projects. That's what you're seeing in the second Niger, where people go there to remove the towers, and even in the third mainland bridge, we're trying to steal the panel, the solar panel that is there. So you need to address security, because there's only 3 reasons why I have government. Government is to spread security and then create prosperity. And when you talk about prosperity, food must be on the table.
Right.
So
let's say, for instance, now this government wants to get creative, with revenue. What options do you think are there? Some low-hanging fruits at this time, aside from borrowing.
I think the PPP is just the easiest way to do it. Like what we saw the previous administration did with Dangote from Apapa up through to Lagos Ibadan Road. And That, for me, is what they should be thinking of, PPP. That's the way every developing or developed economy is doing these days. They look at PPP and public-private partnership. So you use your project as your own funding and say, okay, build and operate for the next 25 years, build and operate for the next 30 years. We expect you to recoup your profit, whatever you spend the next 30 years. And then so that you can free up funds for other things. I think this present administration has not even thought of PPP. But again, they have a challenge. How many businesses are ready to do PPP? Because again, it seems business activities at the lowest ebb they have ever been before. And again, what was it? It's the same policy of government. Whether you call it floating of the currency, whether you call it revaluation of the currency, whether you call it whatever, devaluation of the currency. But that's a challenge that every businesses in Nigeria are suffering from. So most businesses are not even interested in the PPP if you bring it to them. So they are in between but the best way would have been the PPP. Instead of government saying, oh, we're going to construct Calabar coastal road from Lagos to Calabar, it becomes a PPP project. And
we've seen the likes of Kenya, try to raise taxes, and we see how that was resisted by the people, because they don't want the bulk passed on to the people at this point.
We try to do it here. You've forgotten the levy that the government was coming, the cyber security
levy.
Yeah, people stuck against it, and I think the government listened, because sometimes when you look at some of this policy, you begin to ask yourself, what are they thinking? And in our own sake, was going to be domiciled in the Office of the National Security. That means you don't even have a right to ask questions. Because if you ask, they tell you that it's security, we cannot divulge it publicly. So that one was there. So taxes, I see the best committee I keep saying that the president has is the tax reform committee led by Mr. Taiwo Oyelede. I think that's the best committee. I wish the president can listen to what this committee
because they keep coming up with the ideas, but implementation.
They seem to know what is happening down the executive. I'm telling you, they seem to know. He comes about telling that, look, there's no how we should be fixing rate on. Custom duty should be fixed, and it's giving. Look, why can't we? If we think our naira is undervalued, what is the true value of our naira? Then fix the rate whereby goods comes into this country by the true value of your naira. And if you do that, you drive down inflation. But today you are doing 1,505, tomorrow you are doing 1,600, tomorrow you are doing 1,400. The fluctuation, and it does not help businesses to plan. And so a lot of businesses are suffering from that. That is I listen to them again saying, look, on your program too, you're saying in one of your programs, you said, we are not going to tax more businesses. We're not looking at taxing more businesses. That if we use technology, we'll get more taxes from many Nigerians that are not even paying taxes. So you see, they are thinking out of the box. Ways to generate revenue. They are finally...
So instead of raising taxes, expand the tax net.
Ladi, let me tell you, the global best practices these days in any economy is not tax to revenue. It's tax to growing your economy. How you use tax to grow your economy. How you use tax to attract service company, multinationals to come to your country and create jobs and give them tax holiday. I'm not talking political tax holiday. I'm talking real tax holiday for big corporation. Why is Amazon, first of all, had this Nigerian domiciliary name, and at the end of the day, it started in South Africa? Why? We need to begin to think critically. The president have traveled. They have told us this company is coming, this company is coming, up to now, we've not seen any company that have come with efforts. Remember when we lost the Angola deal, and the president, the Minister for State for Petroleum came out and said that in a few weeks from now, we're having a deal of $20 billion that is coming in terms of investment in oil and gas. It's over 3 months. We've not heard anything. So we need to begin to look ourselves and tell ourselves the truth and see how we can use tax to grow the economy. That is what the Tax Reform Committee is trying to do. They are looking at taxes. They are looking at how do you get the informal sector to pay tax. If you get he said it, with the informal sector paying tax, if you are able to get that, then you don't need to borrow. You won't
Instead of those money is going into some unknown pockets.
Yes, because there are over 30 levies. In Lagos State, you have over 30 levies. Local government levy, security levy, this levy, that levy. And
at the end of the day, the price is passed on to the customer.
It's passed on to the customer, and some of these levies do not even find themselves to the government's comfort.
Right, so no development from the taxes.
No development.
And the customers are taking the blow.
So I think we need to look. We are looking at the Kenya negative, but nobody is looking at the Kenya positive. What was the Kenya positive? at a time they were suffering from the same problem, inflation. And they looked at it. The same thing the president did, our own president did, that's what their president did. On the first day of inauguration, he removed subsidy.
Right.
And prices went up, and the people were complaining. And he looked at it, he said, you know what? And he removed prices on PMS alone, not even on diesel, because he felt the companies are still using this. So, but yet, the price of goods and services went up. And he realized that Kenya cannot provide what they can eat alone. They don't have the capacity to provide all that they get. Right. So they know they were importing a lot of goods into the country. He said, you know what? Household items, let it be tariff-free for the next 1 year. Within 3 months, inflation in Kenya has almost become a single digit. By that singular aspect.
Right. Well,
take a bite off your revenue.
We're seeing other countries actually nearing their targets at this point, their inflation targets. But we're trying to get there at some point. But we'll continue conversation right after this break. We have so much to unpack right here on Capital Market. Do stay with us. We'll be back in a moment. Welcome back. Well, we have some earnings rolling in at this time, and we have a couple of companies releasing some of their full year results at this time. We have the likes of PZ Cussons at this time. And yeah, we see pre-tax probably about 20.46 billion. If you could put that up for me now. We see PZ Cussons. We see the revenue, that's about 34% year on year. Cost of sales, 91.6 billion at 13% up year on year. Operating profit, 1,400% at this point year on year. Quite an incredible number there. Profit before tax, 109 billion, down about 632% year on year. And profit for the year, down 772%. Let's unpack these numbers now. I still have with me Mr. Mukhtar Mohammed right here. Those are quite incredible numbers. You see for PZ Cussons.
Shocking, but expected.
Shocking, but expected.
But not at this the kind of level we're seeing. If you look at that result, like you sprint up, you realize that the result of this year was better than last year by almost 34%. And then again, you look at profit after tax. Last year was about, was about 20 billion, and this year, if you look at the profit after tax, about 20 billion last year, comparable to 152 billion. That's about 84% in terms of profit. You could see the bottom line, sales also went up also. Sales was up too, and all these things were up. But unfortunately, the monster.
Right.
You know the monster called devaluation.
When you know, we devalued the currency, I'm wondering if did anybody think about the currency, the losses that most of these companies will actually...
I don't think the government thought through it. You know, I said it then that the problem with the market, that is the currency market, was not, it was all about liquidity. And if you are floating your naira and you align market forces to determine the value of your naira, Ladi, you and I know that market forces are there to make profits. And you don't have the liquidity to really ascertain yourself on ground. And you floated the currency. And at a point, your official rate was about 990-something naira. And Ladi, I couldn't understand why they had to move it to 1,400. For me, that was the biggest mistake, to converse with the parallel market. And we saw that move to 1,900. Until the CBN came and said, look, we're going to give FX to Bureau de Change. You saw that gradual dropping. And before you know, they came back again and said, no, we're not giving to them any longer. They have to have revoking their license. So it's all about what I've seen in this administration when it comes to economic decisions. It's all about panic and all about try and error. Let's see if this works. We've not really sat down to really say what the problem is. How do we fix the problem? Because now you're fighting inflation. You're fighting inflation by hiking rates. But the major challenge why your inflationary pressure will keep going up is because you import a lot of these things and there's no stability. And so how? So address liquidity in the market, get your naira to your true value, then you will see that inflation will naturally come down because 80% of what Nigerian consumes are imported into this country for now. And even if you say you want to stop it, you do not have the capacity to produce enough for them to consume. So we need to stop doing this copy and paste. We started this hike rate with the Americans, with the UK. Today, their inflation is down drastically.
The Bank of England,
even with Ghana, their inflation is down. But ours is not a supply chain issue. Ours is based microeconomic inflation, consumer-induced inflation, demand and supply-induced inflation. Then added to it is what we call FX-induced inflation. So we have 4 things that we are tackling. It's not that and then the disruption in supply chain is still there too.
Right.
But it's not much like these challenges. FX is the biggest. You just talked about PZ. You see the losses, FX. It was FX. 94 billion. Shareholder fund retained earnings all over the years.
So that's all wiped out.
Completely. So they don't have shareholder. Remember, this was the same bill that were begging their shareholder to take 21 naira, later they moved to 23 naira. There's not even 23 naira, 21 naira to give any longer at this point.
So what do you think happens now to the shareholders?
They are at a loss. They're at a loss. Because now, if you tell them to come, where would they get the money to pay? And then the only way they can get you by is to say, okay, shareholders, come back, and then you have to shareholders should come and boost their maybe they do a right issue to get back. Otherwise, now what will happen to them? They will start borrowing money from banks, and you know the high interest rate.
Right, it's already high.
It's already high, so they will not be able to make profit. So they will keep getting deep. So what I mean, it's going to be difficult for shareholders.
They've already suggested that they're going to be delisting from the NJ.
That is the best.
But once we get that agreement, then they.
But that agreement, how can that agreement fly now? Because the retained earnings are not there; they are all lost. So are they going to borrow from the banks to now pay them at a high interest rate? Or are they going to say, okay, now we are not going to leave, but you as shareholders, you have to take your right issue so that we can have shareholders fund. We can even have fund for operation and build back our shareholders fund in the next 3 to 4 years. After that, we begin to think of delisting it. They just have to come up with a strategy. But I don't envy shareholders of PZ at this moment.
I don't either. Quite interesting. So much to unpack there, but thank you so much. Always great having your perspective, Mr. Mukhtar Mohammed, CEO of Finance with Mukhtar. Thank you so much for coming on today.
My pleasure, Adi.
All right, let's get some stories now. From the week, we see they say capital is the lifeblood of a corporation, and as countries and businesses thrive to increase capital flow, conversations about mobilizing private capital is more apparent at this time. So for this reason, the United States Agency for International Development and Chapel Hill Denham put together the Demobilizing Private Capital Conference with the aim of driving investments into sectors that enhance Nigeria's economic and social development. Take a listen.
Capital. We must work on exploring opportunities for power infrastructure beyond just the function of the national grid. The renewable energy sector is a fertile ground for innovation and entrepreneurship. When I think about the 70% of this population that's under the age of 24 with high unemployment, it is all of you in this sector, in the private sector, that will ensure and create jobs and opportunities.
For us, infrastructure is a key area of the business that we've developed, but our business is really focused on areas that are accretive to Nigeria's economic development. So we build the business around big themes from infrastructure to renewable energy, to providing capital, for sectors that have limited access, to capital. And that includes, everything from, gender to, the creative economy, all of these sectors to venture. We're trying to push to see how we can get more institutional capital into them. And this is how we're going to develop this country.
And the Securities and Exchange Commission and Nigerian Exchange Group PLC have reaffirmed their dedication to the comprehensive digitization of the capital market, aligning with the transformation strategy outlined in the revised capital market master plan. The announcement came during a press briefing and stakeholder engagement session held at the Nigerian Exchange Group House in Lagos. Take a listen.
You can't be a world-class capital market without digitization. You can't be a world-class market using papers. You can't be a world-class market not being able to capture adequate information. You can't be a world-class market with, load of unclaimed dividends. It's not. So, for us at the SEC, and especially for this team, the new team that has been appointed by the president, we are committed to creating a market that is new, a market that is viral, a market that is full of innovation, a market that you all will be proud of, that you are part of. One way of doing that is through innovation.
We are lucky that this round of capital raising is by the banks. So we are not saying that you can't fill paper. You can fill paper as an investor, but the platform must receive digital. So the question is, how does paper go into digital? There are two different conversations. So for that man in Damaturu or Sokoto, he should fill a paper. But what we're saying is, because that man probably has a bank somewhere around him, and likely the bank in question, so if you think again, how does paper come in? People would walk to any of the receiving agents and give them a paper form. They'll walk to a broker, they'll give them paper. They'll walk to a registrar. If this was a non-bank, you walk to any of the banks around you, you have to go somewhere to get that paper. And we're saying now, if a bank is raising money, 99.9% likely that the source of that paper is the branch of that bank, for example, not the branch of another bank, just because the banks in this atmosphere are probably still trying to manage that. So it's a blessing in disguise.
And that's the show today. Remember, you can visit channelc.com for more updates. Thank you for watching. And remember, if you must sell, find the top. I'm Ladi Williams. Bye-bye.